Welcome to Procurement classes. Today we are looking at IFRS Q&A question number 3. Let us go to the requirement. When we scroll the question and we go down, there is no requirement down. So go back to the top. And when you go back to the top, it is saying that in each of the following situations, consider whether a provision should be recognized, assuming that the reporting period ends on 31st December in each case. So look at it case by case basis. When you're looking at one, don't look at the rest of them. So, one, an entity in the oil industry cleans up contamination caused by its operations when required to do so under the laws of the particular country in which it operates. This tells you that there is a particular company that is operating, and anytime it operates in a particular country, the country laws requires that they should do cleanup of any contamination that their operation might have caused. And one country in which it operates has no legislation requiring cleanup, and the entity has been contaminating the land for several years, full stop. So it means that there is a country that they are doing their business, but that country, their laws does not require them to do clean up when contamination of the land happens. For several years, there is no law. In other words, there is no legal obligation. There is no obligation like that. Now, at 31st December 20x4, it is virtually certain that a draft law requiring a clean up of land already contaminated. Please, the key word there is already contaminated. So please, that is very key. These two, already contaminated, will be enacted shortly after the year end. So it means there is a law that is now coming to compel that company to do clean up for what has been caused already for the several years that the contamination has been what incurring. The law is now coming to what do you call to compel it to clean up, to do a cleanup. Now, what is important is that did you are you required, should we make a provision or not? Should we make a provision or not? Yes, a provision, we know when to recognize. A provision should be made when there is a present obligation as a result of past event, and the cost can be measured reliably. The cost can be measured reliably. So in this case, the contamination has already what been incurred. But the question is there an obligation? Yes, there is an obligation. Why? They said that there is going to be a legal um, enactment that will take care of already contaminated lands. And that is going to be done shortly after the year end. And it tells you that you know very well that for sure that law will come. And hence, and if it comes, because you have already contaminated lands, you'll be compelled to settle that obligation. And you can measure the cost reliably. You can measure it, how much it will cost you to clean up that operation. Hence, a provision should be made. So please, the first one, we need to what? Make provision for it. So you simply say a provision should be made because there is a present obligation as a result of what? The past event. And because you are virtually certain that a draft law requiring clean up of land already contaminated, in that case, this will lead to a probable outflow of resources and the cost can be measured reliably. So you have made a recognition criteria for a provision. So you will now recognize, the entity should recognize a provision. And that's all. Then the second one, the government has introduced a number of changes to the regulation of the financial services industry. As a result of these changes, entities will need to retrain a large proportion of their employees in order to ensure compliance with the financial services regulations. However, retraining is not a statutory requirement. One entity affected by the new regulations had not done any retraining before the end of the reporting period. So, with this scenario, should a provision be made? Should a provision be made? How will you answer? No, provision should not be made. Why? Because at the end of your reporting period, there is no present obligation as a result of past event. So, since there is no present obligation as a result of past events, you should not make a provision for it. Simple. So, the answer is that no provision should be made because there is no present obligation as a result of past event as at the end of the reporting period. There is nothing like that. So no provision should be made. So if you are done with that, then you move to next question.